Investors will be watching incoming economic data out of Germany in the week ahead, as global headwinds have generally slowed the gears of Europe's growth engine. These include ongoing and escalating trade-related risks between the US and China, as well as uncertainties over the path of Brexit. The US-China trade conflict has been casting a shadow over the capital markets in general, driving risk aversion higher and spurring the yield on the 10-year German Bund to new lows. In fact, the recent bond rally has been largely responsible for turning Germany's entire yield curve negative. Against this backdrop, nervous investors will likely be paying close attention to Germany's economic releases in the week ahead, which include updates on consumer prices, economic sentiment, as well as second quarter GDP. The week gets underway Tuesday with the final reading on Germany's consumer price index for July, after an earlier gauge showed a 1.7% year-on-year increase. Germany's Federal Statistical Office, Destatis, also noted that consumer prices are expected to rise by 0.5% from the prior month, while the harmonized index, which is calculated for European purposes, is likely to notch up just north of 1% over the previous year. Meanwhile, Tuesday also brings a fresh reading of economic sentiment. President Achim Bambach has attributed the recent sour tone to an intensified conflict with Iran, as well as to the ongoing US-China trade dispute and no discernible progress with Brexit. Bambach added that the continued negative trend in incoming orders in the German industry, in particular, is likely to have reinforced pessimism among financial market experts. This pessimism may be reflected in lower prices of certain German stocks, with the iShares MSCI Germany ETF, for example, having fallen roughly 8.5% since July 3rd. Elsewhere on the calendar, investors Wednesday will receive an update on the pace of German GDP growth after domestic demand helped lift the rate in the first quarter out of its previous states of stagnation and decline. Fitch Ratings, which affirmed Germany's sovereign credit rating at its topmost AAA status, recently noted that the soft patch in the nation's economy has proved to be more persistent than it expected. Fitch analysts further noted that the underlying trend in Germany's growth trajectory has remained weak, especially in the manufacturing sector, a reflection, they said, of stubbornly weak external demand. For more details on Germany's economic and financial well-being, read my full report, Germany, Falling in Yield Again, on IBKR Traders Insight. In the meantime, select the event calendar option on the IBKR Trader workstation for a full list of US and global corporate events and earnings, dividend schedules, economic data, IPOs, and more. I'm Steven Levine for Interactive Brokers, asking you to enjoy the week ahead.